Hi, this is Brent with another chart breakdown video for Trade Therapy. We are talking about DOGE, our spotlight from last week. It is Monday, April 28th. It's about 2:45, almost 3 o'clock Pacific time. We highlighted our entry into the DOGE trade. We thought it was a pretty good example of buying into ugly charts. Whenever we cover DOGE, we talk about riding giants and we talk about these big, gigantic, impulsive moves that have a tendency to happen in certain assets like DOGE. And we talked last week about buying into ugly charts, and that if you want to ride giants, you've got to recognize when institutions are buying, which is what we did when we identified this nice structure, accumulation structure, institutional buying cycle right here, and came in right in this area right here that was back tested. This was not an easy hold. It's a 4 hour chart, so it looks like a really long time. And we know how long these accumulation and reaccumulation structures can go on, like they have over the last 3 years across some of the assets, some of the interest rate sensitive assets like growth, emerging markets, and we covered that extensively. But this is a 4 hour chart, so this was really only about a month. But you see the explosive nature of the breakout once we got through this accumulation process. And when you see structures like this form, it's when you start looking out for other signs that there are other bullish type signals coming out of those assets, so that you can try as best you can to identify when these big impulsive moves are going to go. And so one thing that is clear, if you look at this, and we talked about it this week, is if you look at the moving averages, that is one that you can also use. You can see that they get very constricted as price comes over it and then back tests it. You can see the lower term moving averages crossing over the blue 200 4 hour exponential moving average. And you can see they constrict and then they expand. And it's this expansion process that we want to be a part of. And it's kind of the one of the other areas that we talked a lot about in last week's spotlight on Doge is how to use moving averages and how to use additional signals to identify when these explosive moves may happen. We've been tracking this for quite some time. This We covered this last December, the last time we covered Doge. We have this as wave three of this cycle. So we are looking at this structure of this next cycle. So a lot of people looking forward to some sort of a move like this, and not ruling that out. Certainly can happen. But from our perspective, we are looking at this as wave three. And if you look at this, and we identified this potential three rising valley formation here, which is a bullish continuation formation if it follows through, is somewhat similar to this type of behavior here. However, it's occurring much earlier in the cycle. So we only got up to the 786 right here before we back tested back down to the longer term moving averages, which is the 200 weekly exponential moving average right here. Um, the 786, that's right here. That is right here in this cycle. So the last cycle in wave three, it got up to a 1272 extension before it back tested. We've only gotten up to a 786. So there's a lot of pinned up energy right here. We talked about our higher term targets that is based on this extension right here, where it stops just short of a 2.0. Our target right here stops just short of a 2.0 right in there. So this is the level that we're looking at. We are still holding a conviction sized position, which we have used cascading stops. We did talk about using cascading stops to limit exposure when you're trading these high beta assets. Dogecoin is one of the highest out there. It's very volatile. So if you're in this trade and you're trying to manage your position, try cascading stop orders to take you out as structures begin to break down and then buying back in. So we talk about having a tradable lot. This is a good way to do it. Set up maybe 10%, 15% of your position with a pretty tight stop so that if you're sitting on some profits, you can begin to take profits and then cascade out to however your risk tolerance is. So that's what we've done. We have bought back in. We are holding our we got larger in the process. We are holding a conviction size position here. We did look in at a daily chart. We zoomed in and looked at this bullish divergence that is present on the daily chart. We talked about how price had come up. Shorter term moving averages are now crossing longer term moving averages. The daily is getting through the 55-week exponential moving average right there. And we talked about the size of this gap right here. We also discussed how DOGE does not, or typically DOGE violently breaks out of divergent conditions. If I jump over to a live chart right here, it's a very, very good picture of this three rising valleys pattern that has formed. We do see that DOGE is up against its all-time demand line with massive divergence formed. So also this huge base that it's pushing off of right here. There's a lot of things to really like about this chart. And a lot of things, a lot of potential here for explosive moves to the upside. We talked about how institutions and how Wall Street likes to have lockout rallies in these types of situations. What a lockout rally is they will shoot price up almost overnight to the first target where they want to take profits. They shoot it straight up. So retail comes barging in or comes rushing in, chasing what they believe to be free money. Profit is taken, then they repeat the process. This is a lockout rally. So there's a bunch of negative headlines, a bunch of uncertainty in the markets, and then all of a sudden it shoots straight up and goes up 110% or 310% and then 110% in back-to-back weeks. And those are lockout rallies. In the situation that produced those lockout rallies is very similar to this situation right in here. Not to mention, this last rally right here also started right off of the all-time demand line here. So there's a lot of things to like about this chart. We do have so much higher targets as we discussed. Our target is our long-term target for wave 5 of this cycle is just short of $8, believe it or not. So pretty exciting time in the DOGE trade. I hope everybody enjoyed the spotlight this week and hope everybody had a good day trading.